Ladies and gentlemen, the past 2 days has been jam-packed with news. So I want to make this video not about a particular stock, but across, a wide range of my portfolio, and hopefully some of these names also cross over yours as well. First up, we have Nvidia stock. Nvidia is up over 55% in just over a month, adding $1 trillion to their market cap, and still to this day is running over 3% to about $134 a share. We were talking about this. I was banging the table at the 80s and $90 range, just saying how crazy some of these trade complications are making such an amazing company be valued much lower than it probably should be. Obviously, as these trade deals start to get cleared up, this is going to bring a lot of bullish sentiment to Nvidia again. But mainly as of the recent high that we're seeing is due to Nvidia actually allowing to be able to sell chips to Saudi Arabia. See, one of their main companies here, Humane, actually wants to build a 500 megawatt data center, and they're looking to Nvidia to fulfill that demand. Also in that, they also want to build out these data centers to about 1.9 gigawatts by 2030. So essentially, Nvidia is going to be selling them 18,000 chips of their brand new Blackwell Ultra, which is their GB300 chips, to Humane, which is roughly about a $4 billion order whenever you include their InfiniBand networking as well. This is the Blackwell Ultra MVL72. It's not actually what we have today. We have the Blackwell Ultra chips, but we just don't have it in a 72 GPU rack quite yet. Also at this meeting, Nvidia and the Saudi Data and AI Authority also announced that they're going to be deploying 5,000 Blackwell GPUs for a sovereign AI factory and enable smart city solutions. Once again, this is over $1 billion order for them, and just goes to show you how much demand there is in new areas that potentially are not just the US or China. See, whenever Nvidia actually breaks down their geographical sales, right now they have US, China, Taiwan, Singapore, and other countries. But it's seeming that with all these deals that Trump is starting to sign, that the other deals category for Nvidia being a product that no other country can replicate right now, that Nvidia is going to see massive demand spike ups from other countries that potentially Wall Street modeling out their revenues just weren't seeing before. So this is very exciting for Nvidia and could potentially lead to even more diversified revenue streams going forward. Now, Robinhood is in the news for another very exciting update. An acquisition of WonderFi. They're a crypto exchange in Canada, and they have many different companies that they end up covering. They have 100% ownership in all four of these businesses, and now Robinhood has 100% ownership in all four of these businesses. We'll go through them all. Year over year from 2023 to 2024, they are up 108% on their revenue, which led to $62.1 million. Now, remember, these are Canadian dollars, but they also, like, the purchase price of this company was also in Canadian dollars as well, 250 Canadian dollars, or roughly about 178 million American. Okay, cash and digital assets are up 31% to 48.7 million. Client assets under custody now reaches 2.1 billion, nowhere near the total size of Robinhood. It actually adds only about 1%. But the total crypto volume is at 3.6 billion, which is up 28% year over year. Adjusted EBITDA is 12 million, up 345% year over year. So we're acquiring a company that is not going to put on negative pressure onto the business in terms of profitability. And then under their operating highlights, let's go on to other slides because I think that this will explain it better. So first off, through BitBuy Private Wealth as well as CoinSquare Wealth as well, they have high net worth clients that they try to bring on. 400 corporate clients, 10,000 high net worth clients with really fast trading volumes. They're trying to bring on a bunch of corporate crypto services, which Robinhood does not currently have. And they have high yield staking and access to deep global liquidity for hundreds of assets through smart order routing, which also Robinhood does these days. But these are some other interesting points. One, they're going global. Australia, okay. This is also very interesting. They also wanted to get out of just crypto and go more towards equities, indices, commodities, and foreign exchange. So where does Robinhood see potential regulatory approvals in Canada? And could they potentially start offering, what they've just acquired through WonderFi to then offer their equity platform through Canada as well? So this could be a really big upgrade for them. So multi-asset trading, really, really big. Okay. Smart Pay. This is crypto payment solutions for businesses. This one, I think, for the most part, Robinhood is going to leave alone. They're going to let the department that runs SmartPay continue to run SmartPay and not completely integrate it just yet. but it is a good asset to have to potentially maybe one day use. Maybe they'll sell it off on their own because it really doesn't fit into the Robinhood strategy right now. I also found this report back in April 26th of 2024 where I think maybe they found the connection to WonderFi. WonderFi announced the acquisition of Bitstamp's Canadian clients. They bought a book of business, their Canadian book of business, away from Bitstamp and brought it over to WonderFi. And obviously Robinhood just recently acquired Bitstamp. So maybe this is where they found their name and they said, oh, well, why don't we just buy them too? We don't want our Bitstamp clients going away. Let's acquire them as well. That was roughly 110,000 client accounts from Bitstamp, by the way. Now, Johan, who actually runs crypto for Robinhood, said WonderFi has built a formidable family of brands servicing beginner and advanced crypto users alike, making them an ideal partner to accelerate Robinhood's mission in Canada. Love this from Johan and Robinhood's thing. And as well, we also heard a little commentary from Vlad. Vlad said, remember when you asked when Canada, Tanner? And he literally added me in this tweet whenever reporting to the actual announcement of them buying WonderFi for Canada. So they are coming to Canada to some degree, obviously, with this acquisition. But does this also mean equities? We could speculate that potentially it does. We'll see. I mean, if you think about it, Robinhood crypto is in Canada. So that's not actually what I think he's talking about here. I mean, maybe he is, but really what I think it is that they're going to get deeper ties into Canada and then add that into their suite of different countries that they're in. So hopefully I'll be a Robinhood user very soon. Mizuho Securities, which is Dan Dolev's team that actually covered this, actually put out why he potentially thinks Robinhood is going after Canada. See, he puts in Canada's population at 41 million users. Of the ages between 15 to 64, they believe that around 66% of the population fall into this, or 27 million people. They think that they can get a certain percentage of those user bases, okay, which will lead to about 3 million total funded accounts. They also go in to say that the average revenue per user is probably going to be 75% of what it is in America due to the GDP per capita. And then adding that on to Robinhood will potentially add about a 9% upside to their total annual revenue. This is, for the most part, why most companies don't try to enter Canada. It's just such a small market. It is a good potential 9% add for Robinhood, but also it might just be more efficient to just sort of deepen their ties within America alone. But Robinhood seems to be able to do both, and so why not? Now, we also got more Robinhood news. I mean, the WonderFi acquisition seemed to be enough, but no. They also reported their full April numbers, not just slight hints, where funded accounts came at a new high of 25.9 million. Total platform assets came at a new high of 232.3 billion. This is an absolute huge addition, and it's not just the March strengths that we ended up seeing from their acquisition of Trade PMR, but this is also just customers also doing well in April. Net deposits also was 6.8 billion, super high, still holding up a 37% year over year growth or annualized growth rate. And then cash sweeps also growing. However, we're starting to see the non-gold cash sweep starting to really climb. I assume that's Trade PMR, but it'll be interesting to see how fast they can start to get those users over to gold sweep as well. Now, if we take all the equity volumes, option volumes, and crypto volumes, some people could say, hey, but crypto is fine because the equity and option volumes are new highs, so we still might end up doing fine. Well, the numbers just don't show this, okay? Crypto makes up for such a large percentage of their overall make, and in the gray there is their equities. So really, this tiny bar here for equities is nothing. Like, we don't really care about the fact that even if they hit new highs, yes, it is additional revenue, but it's still so small, you know? Options does make a big chunk of it, and that continues to grow higher and higher. So we will potentially hit new highs in options. But if crypto does not turn around in May and June, which it's already starting to turn around for May, but it has to continue to hold that all the way through the next month, we could see another sort of drop in their quarterly transactional revenue. Regardless, Robinhood is doing great. It's nearly up 30% in just the last 5 days. It's doing absolutely phenomenally well, and hopefully will continue to push higher if people believe that markets are going to return back to some normalcy. Next up, we have a SoFi story, and this one is not so good. See, in the technology platform, we lost roughly 9 million users, or 9.3 million users quarter over quarter. And normally, what we gain between roughly 3 to 8 million users So in a way, this almost looks like we lost anywhere between, 13 million to potentially 16 million users or 17 million users. If we actually take into account that we didn't grow, we lost all of those. So who are these 17 million users that we could have potentially lost? Well, Chris Lapointe says this was driven by a large client's decision last year to diversify their processing providers, which was factored into our outlook for 2025. However, he might not be telling the full truth here. Driven by a large client's decision, in my opinion, now, this seems to be the largest client's decision to diversify, meaning bring in house their processing provider, not diversify, but bring it all in house. And the client I'm talking about is Chime. In addition, transactions have historically been processed by Galileo Financial Services, or Galileo as SoFi knows it, a third party payment provider, though we're in the process of transitioning our members' transactions to be processed by Chime Core. As of the end of 2024, we had transitioned all credit card transactions to be processed by Chime Core, while all debit card transactions were still processed by Galileo. You can see the risk factors, blah, 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 blah. But they're transitioning away from Galileo and bringing it all to their own in house payment provider. It does worry me that a bunch of companies are taking their assets away from Galileo. And I also worry this about companies like Robinhood as well, who have historically worked with Apex Clearing, for example, and then worked in Robinhood Clearing to then lower their costs on their own, could potentially now create their own Robinhood core to process payments for themselves, or something along these lines that just ends up continuously losing clients to potentially cheaper alternatives. Either way, SoFi for me over the last year and a half or 2 years has not been focused on the technology platform and has been wholly focused on their ability to cross-sell members onto their existing platform, not worried about third parties. And in that sense, it's still fine. If Galileo wants to be looked at as their own in-house payment provider, well, then we already have that. And then a bunch of companies like Chime and Robinhood could potentially catch up to an existing product that just helps facilitate our own transactions. Now, it doesn't mean that revenue goes down to zero. We'll probably still continue to make $100 million a quarter on this product and potentially still grow it over time. But I do worry about continuous clients looking to get off the platform over time as they potentially, smarten up or get more mature over time. And to be honest, out of all the clients that have grown to large sizes that have gotten off our platform because of their size, it almost exclusively has been because they have both a debit and a credit card solution. And once again, I will continue to bang the table that Galileo needs some sort of credit card solution. Anyways, thank you all so much for watching. I really do appreciate your time. But bye for now.